Hello, everybody, and welcome to Strategy Lab from Lighthouse. This is episode 2. If you did not tune into the first episode, Strategy Lab basically works like this. We have clients, we have customers that come to us and say, listen, we love the product. We want to know how to make sure we're using it the most effectively. We want to make sure we're getting the most out of it. How do we do X or how do we do Y? So that's why we came up with Strategy Lab. We show you guys how we, Daniel and I, would approach various challenges and obstacles that you would face in your day-to-day operations as a hotelier. How would we use the Lighthouse platform to better execute on those challenges? And today we are diving into the issue of commercial team alignment. Something happens within the organization. You get a request, you get a proposal, and you want to make sure everyone's acting potentially from siloed data in different spots. How do we ensure that everyone is getting to the same conclusion and working through the data in a way that everyone answers the question the same exact way with the same data? My name is Blake Reiter. I'm the Director of Hospitality Research here at Lighthouse. And with me for this episode and always is Mr. Daniel Foreman. Daniel, say hello.
Hello, everybody. My name is Daniel Foreman. I'm a commercial strategist here at Lighthouse. And this is what I did for about a decade, commercial strategy. So we've got a really good example that we're going to look at today, which is a displacement analysis. And this will be an excellent opportunity to show how you can get your sales, your operations, and your revenue management all on the same page when you have a situation like this pop up. So, yep, super happy to be here and ready to look at some data with you, Blake.
Fantastic. And now within this episode, we are going to be using both Lighthouse pricing as well as Lighthouse performance, and we are going to be focusing on the business intelligence features. And with that said, Daniel, set the stage. What's our fictional hotel? What are we doing? How are we making sure we have commercial team alignment?
Absolutely. So yeah, let's jump into this example. Today, we're going to be looking at a fictional hotel called RVN, and this is a 60-room boutique property. And this particular hotel has just received an RFP for a wedding block. They are looking for best and lowest possible rate. So Blake and I, we're just going to go ahead and start walking you through the different places that real-life commercial strategists, salespeople, and even ops should be looking at before they make that decision. So let's go ahead and jump in and let's pull up this RFP and review it together. All right, so here it is, Blake. This is, and by the way, the names look real, but this is a fictional RFP, I promise you. So
this is fake. This is fictional. Fictional.
This is fictional. So if your name's Sophie Brennan,
do we think a Sophie Brennan has ever married a Marcus Calloway in the history of the world?
You know, I bet somewhere out there, there is somewhere out there a Sophie, now a Sophie Calloway. I'm sure it's happened. I'm sure it's
has
happened.
To be. There must be a Sophie Calloway, and her original maiden name was Brennan.
Okay, so let's take a look at some of, what we need to know to make a decision here. So they are looking to check in on Friday, July 10th. They're staying for 2 nights, checking out on July 12th. And if we look at their room block request, they are looking for a total of 10 rooms for 2 nights. So that is 20 room nights total. Now, this is really the big kind of top line stuff that we need to know before we start to dig in and do the actual displacement analysis. One additional thing I'll call out here, if it comes to this, if it's more of a coin toss decision, their ancillary spend, it looks like they are willing to spend up to $2,500 in food and beverage since this is a wedding. Cool. So all pretty straightforward. If you are a salesperson or a revenue manager, I'm sure you have seen a million RFPs like this in the past. So let's start to break this down a little bit. We've got those stay dates pulled up here in Business Intelligence within Lighthouse Performance. Okay. So here is that weekend, 7/10, 7/11. These are the 2 nights that our lovely couple wants to stay. So I'll just kind of throw it over to you, Blake. What do you see so far as what we've got on the books for this particular July weekend?
Yeah. So, right now I'm seeing we're below 50% occupancy for both the Friday and the Saturday night, 28 rooms on the books and 25 for Friday and Saturday, respectively. So even though we're currently sitting at less than 50% and less than a month away, we are forecasting a sellout. So I know I'd be curious as to where we were last year as of this time and where we ended up finishing, I think that would be helpful as we're kind of working through whether or not we want to accept this group.
Yeah, that's a great point. Let's spot check our forecast just to make sure that we're really confident in that forecast. So let's navigate now to our last year in forecast tab. And here we're going to look at pace together. So this is where we were same time last year, where I'm hovering the cursor right now. So same time last year for the same Friday, we had 22 rooms sold. So we are up in pace by 6 rooms.
Mm-hmm.
Same time last year for Saturday, we only had 20 rooms sold. So we're up in pace by 5 room nights. So from a room night perspective and an occupancy pace perspective, we are up versus same time last year. So for this hotel to pick up that many rooms, it looks like this hotel, to get to a sellout, we only need to sell 32 more on Friday and 35 on Saturday. That looks very much in reach based on what we saw same time last year.
So what I'm gathering, this is one of those situations where we would need to do an analysis because we will presumably be displacing rooms based on what we kind of see right now and where things were last year.
Yeah, exactly. And the reason why this is not just an outright no, even though we are forecasting a sellout, is I'm glad you brought this up, because if we look at the pace, we're up from a room night perspective, but we still have a lot of room to grow on the ADR side. So this wedding might represent, if we can get a really strong rate from this wedding block, this may help us kind of catch up to last year's ADR performance. And scrolling over here to the right, just to go back to our forecast, this is where we're forecast to end up on ADR for Friday night, this $327, and then $403 on Saturday night. Okay, so what I'm going to do now is, just because I want to simplify this view for everybody and put everything into just one nice clean visual. So this is looking at just the most key KPIs that we really need to focus on to do this displacement. So we know we've got 28 rooms sold on Friday so far, and then 25 on Saturday. We're forecasting a perfect sellout on both nights. So that means that we are expecting that we're going to pick up an additional 32 room nights on Friday, 35 on Saturday. And for those remaining 32 and 35 rooms, these are the ADRs that we're forecasting that we're going to pick up. So $346 on Friday, $478 on Saturday. This is what's called our incremental revenue. This is what we think that we're going to pick up regardless of whether or not we take this group, right? So knowing that we plan to sell 60 rooms, if we take a 10-room block, that means that we must be displacing how many rooms, Blake?
Oh, so 10-room blocks, so 20 rooms total over the 2 nights.
Exactly. Yep.
Mathematics.
So this group, if we take them, sure, they may benefit us, but we know that they are very likely to displace 20 rooms. And if we calculate what that displaced revenue is going to be, we're looking at this number here. So that's going to kick out about $8,200 in room revenue. And then by dividing these two numbers, that's how we arrive at this minimum acceptable rate, or MAR. What this number right here represents is anything below $412, it's not worth it to take this particular group.
Well, Daniel, $412, but let's say they say we'll actually do $399, but we'll do $2,500 or $3,000 in incremental ancillary spend. They're going to have drinks for the night before the wedding in the bar, or they're going to have a brunch before they send their guests off. Because, Daniel, you need a brunch on Sunday. You can't just send your guests back home to where they are without a bagel.
Yeah, that is such a good point, Blake. You've got to
you
factor
need to give them
in
a bagel, Daniel.
You've got to
Bagel
factor in
smoked salmon.
even bagel revenue factors into a good displacement analysis.
Capers, brined capers. You got to have that.
Lox revenue.
Yeah.
Yeah, so that's a very good point, Blake, because it may come down to that, right? We may offer them, hey, we're really looking for 419. They may try to meet in the middle at 409, and it's really that ancillary revenue that kind of is the tiebreaker. But let's take a step back and let's head back now. So we are back in performance, Blake. So let's look at a couple other places really quick, because we're throwing around these rates, right? Like $400, $399, $419. It sounds extremely high, but again,
Totally.
we're a 60-room boutique property. Okay, we're a fictional property, but we're a nice property. So let's see if these rates are even within the realm of being realistic to offer to a wedding group, right? So what I want to do is take a look at our strategy tab here, and over here on the right, you'll see our current rate shop here for that weekend. So here's the weekend that we're talking about, 7-10 and 7-11. And our rates are pretty elevated, actually. So we're above $500 here on Friday night. We actually do have a length of stay restriction here on Saturday night. And the comp set average is in the 400s, the low 400s.
Similar to our break even. So it doesn't sound that crazy when the comp set is offering roughly what we would theoretically be looking at from a break even standpoint. And Daniel, correct me if I'm wrong, but that number next to the 503 and the number next to the 419, those red negative numbers, that's how rate has been moving over the last week. So it looks like we've actually, and the comp set, frankly, have been discounting rate over the past 7 days, potentially indicative of the need to discount more if we don't get the pickup that we're looking for.
Yeah, like you spotted, rates are coming down over the past 7 days. Now, this is our average, right? So this is kind of like a blend of our entire comp set. So what I want to do is I want to tell a little bit more of this story. So I'm going to head to pricing and let's actually break it down and let's see where we are in relation to all of our individual competitors, because it's nice to look at an average, but also too, I want to know exactly where I stand. So here we are. And if we look at it in the pricing view, we're actually kind of more middle of the pack, right? So we've got competitor 4 and competitor 0 that are both actually quite a bit higher than we are. And then you have competitor 2, 5, and 3 that are a bit lower. So actually, we're not necessarily the highest in the comp set, even though we do have a pretty aggressive looking rate at $503. And if we click into this night as well, we can see some of that rate evolution. And here's what you were seeing on the performance side of things, Blake, where, some of these competitors are dropping here in the past 7 days. So on average, rates are coming down a little bit, but overall have been, relatively steady over the longer period.
Got it.
So let's head back to performance and let's kind of talk through what our ultimate decision might be with offering this particular group a rate.
Let's do it. And frankly, I also think we might just want to talk about, as we're doing that, are there other groups within the hotel we'd want to make sure that are involved? Like, are we going to have cancellation policies? Are we going to have guarantees? Maybe we should be pulling in sales and pulling in ops just to make sure that we're all on the same page and in alignment on how we're structuring this type of contract.
Yeah, that's a great point, because for those of you who are watching, if you're a salesperson or a revenue manager, wedding groups are very polarizing. So you might already be screaming at the screen like, don't take it. It's a wedding. Don't do it. Whatever you do.
But they could break off the engagement.
Right. But so far, I still think that I think this is one that we should at least offer a rate to.
Right. They seem in love. They seem like they're in love.
At least throw something their way. But that's a great point, Blake. Like, a lot of times weddings do have issues with they don't pick up the full block, or, the only 4 rooms call in and ultimately end up booking, or they cancel or something, something like that.
One of them goes in with a prenup and they're like, nope, not happening. Wedding's off.
Exactly. Yeah. So those scenarios do happen, but I think at the end of the day, we should at least still offer, something to this particular
same page. Alignment.
Wedding block.
Yeah.
So, knowing that earlier we did that, we looked at some of those key KPIs and, we calculated that minimum acceptable rate, which came out to about $412 based on what this group block was going to displace. Really what I would do, and here's what I would recommend to a salesperson who's actually like interfacing with this wedding block. I would say, let's try to build in some year-over-year pricing growth. Let's offer them something in the neighborhood of, $449 or $439. But just know that your ultimate walkaway rate is going to be that minimum acceptable rate of $412. That way, we've kind of built in this defense mechanism just in case things don't necessarily go our way. We know that we're at least going to perform in line with what our current transient forecast has us at. Any thoughts, Blake? Like, how would you handle this particular group?
Yeah, I would pretty much do the exact same thing. With the only other addition I would say is I'd want to make sure with sales and the ops folks that we're on the same page in terms of cancellations and guarantees. I'd also probably want to just make sure we're on the same page in terms of food cost, because obviously if we're going to be having a guaranteed minimum F&B spend, that's definitely revenue that has some decent expenses associated with it. So I'd probably just want to make sure we're factoring that in, so we're not, making that we're not leaving money on the table. But I think more or less we're on the same page here.
Cool. So that is how we kind of walk through and think about doing a displacement kind of in the traditional way, where
Yeah,
we're
baby.
looking at our forecast, we're looking at, calculating a minimum acceptable rate, we're looking at, what's our incremental revenue, what's our displaced revenue. That's what I would call more the traditional way of doing things. But I think we're about to set up something really cool though, right?
Yes, exactly. So what we did was the traditional way, and that was still quite efficient. It took, what, 15 minutes roughly? But if you're watching this and you're not aware, Lighthouse just announced Ernest. This is a new tool that, think of it kind of like ChatGPT, but specifically tailored to your hotel property. You could ask it questions and talk to it just like you would ask questions to ChatGPT and get answers in seconds. So Daniel, let's show them exactly how this works, and there'll be opportunities at the end of this to get on the wait list to take a look at and experience Ernest yourself at your own property. Again, this is kind of like ChatGPT, kind of like Gemini or Claude, whatever that chat-based interface that you might be familiar with. Imagine that, but tailored specifically for your property.
Yep. And Ernest can do a little bit of everything commercial strategy wise, but here is the displacement analysis example put into Ernest. So here we can see a user is typing in, "Hey, Ernest, I need a displacement analysis for a group inquiry we've received. The group is requesting 15 rooms for 3 nights, October 16th through 19th, and they've quoted a flat rate of €112 per night." And here's something really interesting. Ernest comes back with some additional questions. It wants to learn a little bit more so it can give an even better answer. So it says, "Hey, what's your ancillary revenue?" which we just touched on in our traditional analysis, but it also wants to know what your cost per occupied room is, which is really cool. So the user is responding to Ernest. They're saying, "My cost per occupied room is €47, and this total estimated ancillary contribution is at €2,100 across the 3 nights." And then the user types that in. And this is really awesome. Ernest gives you an entire playbook that you can take back and present to that particular group. So here we've got an entire counter offer strategy. It's saying, "Hey, do not accept anything less than €112 per night. Instead, you should counter with €135 per night with a walkaway rate of 125. So don't take anything less than that." And then it even gives you some fallbacks too. So if there's still, you're still in that negotiation process, Ernest is basically walking you through the entire thing, which is super, super powerful. And
I
again,
like
that
how
only
it
took
said,
what, like 10 seconds?
yeah, I like how it said on the bottom that you, if you're as you're negotiating, you can consider adding in one of the shoulder nights, because it says you're currently adding October 20th, soft shoulder night, currently sitting at 19% occupancy. You can offer them at a lower rate. It's giving you all sorts of different strategies that you can actually counter with and different ideas to think about. Super cool.
Yep. Yep, exactly.
Ladies and gentlemen, that about does it. That has been Strategy Lab from Lighthouse as part of the Spotlight series of podcasts. Ladies and gentlemen, we will be back every single month doing this. We take a challenge, we take an obstacle, we take an issue that our clients come to us with and say, we want to make sure we do this the right way, the most efficient way with Lighthouse. How do we do it? And then Daniel and I will walk through how we would do it using the Lighthouse platform. We hope you guys found this interesting and informative and got something out of this that you can take back to your team and put into action right away. Ladies and gentlemen, we will see you next month. My name is Blake Reiter.
I'm Daniel Foreman.
And we'll be back next month with Strategy Lab.
Thanks, everybody.